to show us a presentation. Let us now welcome the founder, Greenleaf Corporation's Mr. Harshveer Soni. Wow, that kind of energy I want. So do not restrict yourself. You have all the liberty. A warm welcome. The next is Sugar Analyst, COFCFO, Mr. Sonu Kumar. Please keep clapping. Yes, that's good. Please help me welcoming the next speaker, who is the Senior Analyst, Tropical Research Services, Mr. Prasad, MSR. Without further ado, please help me welcoming Sugar Trader, Viterra, India Private Limited, Mr. Sachin Lakade. I will request all the speakers and my august audience, if you're stepping on the stage, you have to be very careful with the first step towards the stage. Please help me welcoming our next speaker, who is Sugar Analyst, Indian Subcontinent, Sucden, Mr. Nitin Tarate. Ladies and gentlemen, we have 6 speakers for the session, and our moderator is Mr. Kapil Nema, who is the Assistant Executive Director for Dalmia, Bharat Sugar. A very, very warm welcome on the behalf of Chini Mandi. Ladies and gentlemen, we are starting with the first session, and I'll request the moderator, sir, to kindly take the charge.
Good morning, everyone. We'll start with a short presentation by Nagaraj, and then we'll have a quick round of discussion around the presentation and around the balance sheet with the panel, and then we'll open up the forum for questions to the audience. That is how we start. So you can take the charge.
Good morning, and a very warm welcome to the Sugar and Ethanol Conference, and I congratulate Chini Mandi for organizing such an excellent conference, and this is the second version, and I wish that this conference will celebrate a silver jubilee, and I wish Chini Mandi team grand success in the upcoming years to come. And this session has actually gathered all of us to share about the market insights, developments, plans. And today my topic is focusing on the mapping the market thought of global and Indian sugar. So typically we follow an approach called mapping the market thought, which is a combination of global economy analysis, fundamental and technical analysis. So it is now very important for us to understand the commodities, to understand the global macros, because you have strong dollar weaker commodity relation, and if the dollar continues to strengthen, you will have a weaker commodity price cycle, and interest rate also has significant influence on the factors. If you look at the macroeconomic overview, there is a surge in the global inflation, because in 2020 when the COVID struck, aggressive money has been pushed into the market. In US alone, $4 trillion have been infused into the market. So at that time, the bond rates were zero. So when government wants to issue the bond, when the return is zero, nobody will buy that bond. So it's like husband issuing the bond and wife buying it. So the US Fed started buying those bonds and pushed that money into the market, with which we have seen a surge in the inflation. In US, in 2022, the inflation has gone up to 7.2% and European Union 8.4%, which is kind of unprecedented. So to combat that particular inflation, the various governments have started increasing the interest rates. So the higher the interest rate, so the lower the risk capital is. So people will start putting more money in their fixed deposits and they will not invest in the real estate, they will not invest in the markets basically. And even cost of holding a ton of sugar also significantly is going up. So everybody wants to now turn their inventory into cash because the cost is very high. Because of which, because of the huge increase in the interest rate, and also deleveraging by the US. So the $4 trillion which they have infused now, because there is an interest rate is 5%, almost Fed is buying $95 billion every month. So 4 trillion divided by 95, approximately it is 48 months. So for the next 4 years, it takes whatever they have infused the money into the market in 3-4 months, it will take 4 years for them to take that money out. So during these 4 years, you need to have a higher interest rate cycle. So we need to prepare at least for 4% interest in US for the next 4 years. Now probably it will go to 5.5. It may come down, but it will not go below 2%. It will stay around 4%. If US interest rate is 4%, the Indian interest rate at least should be 6.5% to stop the depreciation of the rupee and to stop the flight of capital away from the markets. So because of this surge in the dollar, there is a potential for a recession in the year 2023. So, and that recession, we can see the 10-year minus 2-year bond yields are at negative, meaning the cost of funds for short term are higher than the cost of funds for the long term. So, when you have such thing, people will give money to you for working capital instead of investing for the long term of the assets. So that will lead to the recession. But we feel that the recession impact will be relatively less for US because of the problems of Ukraine-Russia war and higher natural gas prices, higher electricity prices in Europe. All the money, there is no investment avenue in Europe. And because of the COVID in China, there is not much investment avenue in China. So the money from China and Europe is flying to US. When they are unwinding, they are able to still maintain the growth. So the impact of recession will be mild in US, but we feel that at least we will have minus 0.1% is the expected growth for US, whereas the IMF has projected 1% positive growth. We are expecting minus 0.1% growth for US. And Europe, we are expecting around minus 0.5% growth. And for China, we are expecting around 4.5% growth. And for India, we are expecting around 6.8% growth for the year 2023. Now, if you look at India, because of the imported inflation, because of the global imported inflation and strong dollar, we are seeing outflow of the funds because the risk-free return in US itself is 5% in dollar terms. So a lot of money is going out. That is why our forex reserves have fallen from 650 to below $550 billion. And we have seen the mercantile trade balance at minus $289 billion. And going forward next year, we are expecting the trade balance to narrow because the crude oil prices also will be down. So minus $201 billion is the expected trade balance. And 2023 is likely to witness inflation cool off from 7.5% of CPI inflation in 22. We are expecting 6% inflation in the year 2023. So this, if you look at the credit impulse, that is how much banks are infusing the money into the market as a percentage of GDP. The USA credit impulse, after reaching almost 17-18%, has going into negative. So when the credit impulse goes down, the growth slows down and then it will lead to inflation. So, and we can see European Union also, the credit impulse is going into negative. But in China also, it is coming down from 37% to 27% because there's but India, the fourth chart, if you see the fourth chart, the credit impulse is going from 25 to close to 34%. So India is increasing the debt and banks are aggressively pushing the money into the market. So the Indian growth will be sustained. So keeping that in view, let's look at the global crude oil supply and demand. So the crude oil supply is expected to be around 100 million barrels per day for the next 4 quarters, and the demand also is expected to be slightly lower than 100 MBPD. But if you look at surplus and deficit, we have seen in 2020, for 2 quarters, we had more than 5 million barrels per day surplus, meaning production over consumption balance. But if you look at JFM 23 and AMJ 23, that is January, February, March 23 and April, May, June 23, the surplus is expected to be around 0.7 million barrels per day. That is why until May, June, you will see crude oil prices in a very defensive mode because you are having excess supply. So in terms of the dollar, we are expecting the prices to bottom out, the dollar index around 102 and slowly again will increase. The rate growth will continue to strengthen the dollar. The dollar index going below 100 is not there. So mostly dollar index will bottom out around 102 and slowly inch up towards 109. And crude oil, crude oil, we are expecting the Brent crude to bottom out around 70-68 and WTI crude around $65 per barrel. And from there we will see again a jump towards 90. So for the next 2 to 3 months again we may see a jump after the winter and subsequently again the fall. So mostly Brent crude will trade in the range of 68 to 90 for the next 4-5 months is the expectation. Now before going to the sugar, I want to bring to the attention that the EV vehicle demand in 2025 by various forecasting agencies, there are very different kinds of forecasts. Like Deloitte is forecasting 11 million units and Goldman Sachs is 13.6 million units. But in 2030, most of the consensus is around 30 million units for the electric vehicles. So the British Petroleum has given a report in 2019 where in 2019 the demand for the global crude oil was 97.6 million barrels per day, and then going into 2030 they are expecting 100.5 million barrels per day in a new momentum scenario. In accelerated scenario it is 97 and net zero scenario it is 90 million barrels per day. But we are already having a higher demand than what was projected. Because of this kind of reports in the market, we had the investments in the refining sector in crude oil is significantly down, basically. So we are having, that is why very high diesel prices, high gasoline prices, which is good for the ethanol sector in short term. But going into 2025 and 2030, the expectations of the demand are not very optimistic. And even EV sales, Tesla Motors has given an EV sales have done in 2022 of 0.94 million units in 2021. And they are expected to reach from less than 1 million units to 20 million units going into 2025. So with this thing, we did one gasoline demand expectations in India. So in 2021, in 2015, the gasoline demand was 21 million tons. And the ethanol was 0.53 million tons. 2021, the gasoline demand is 31 million tons and then 1.4 million tons is the demand expected. So we are expecting the CAGR from every 5 years will come down, but the gasoline demand by 2040 will reach 61 million tons from the current number of 31 million tons. Means roughly doubling in 20 years, the gasoline demand. So the ethanol capacities wise, by 2025, the ethanol capacity, cane-based, is expected to reach 6.27 million tons and 2.7 million tons is the grain-based ethanol. By 2040, 9.6 million tons is the cane-based ethanol capacities and 3.2 million tons will be the grain-based ethanol. But while the capacities are coming, will we have the enough raw material to supply? So we did one analysis. In terms of the projection, here I have given mostly based on the if you look here, so the ethanol production from sugarcane in 22-23 from B heavy molasses it is 318 crore liters and 176 is from the C heavy molasses. So by 2040 it will reach 740 crore liters of B heavy molasses, and direct cane juice base will reach 488 and C heavy molasses will be around 54 crore liters. So with this we are assuming that the sugar cane production in 22-23 is around 486 million tons. By 24-25 the cane production will reach 550 million tons. So from in 1920 cane production was 363 million tons. So from 363 million tons you are reaching 700 million tons by 2040. So if you look at the right hand side chart, the sugar diversion to ethanol and the potential sugar production, means basically that is a gross sugar production. From 21-22 of 39.4 million tons, we are talking about 55 million tons by 2040. Okay. So with the 26% diversion to ethanol, we are talking about a 40 million tons of net sugar production by 2040. So keeping this in view, we think that the ethanol blending in India may at best reach 17.5-18%. It will be very difficult to reach 20% because of the non-availability of the raw material. Because the gasoline demand also is increasing. Now, if you look at the short term, there are two scenarios that are emerging. The initial sugar production for 22-23 was expected to be 36.6 million tons, and 22-23 second scenario is 34 million tons because of the weather and whatever problems we are listening. So the production could be around 34 to 36 million tons. With that thing, with the consumption of 27.9, and if the production is 36, probably exports can go up to 8 million tons. If the production is 34, exports will remain below 6 million tons. And with the 27.9 million tons of consumption, overall ending stocks from 6.5 will probably reach around 6.5 to 6.6 million tons. So this will, but at the global level, for 22-23, we are expecting 190 million tons of production and consumption of 185.4 million tons, and stock usage ratio will be around 26.3% versus 25% last year. So with the end stocks of 68.6 million tons and the potential surplus of around 4.8 million tons over the consumption, we are expecting that the prices will be in a defensive mode. So the recent peak of 21.5 probably is a peak at least for the next 4 or 5 months. So we are expecting the current prices to take support around 18.5. But when based on the Indian sugar export policy, whether it is 8 million or 6 million, based on that, again the prices may go back from 18.5 to 20 cents. And eventually, once the Brazil crop comes, going into March, April, we will again probably drop towards 17.5 cents. So, and after that, I think the market to go below 17.5 is a tough thing. Maybe 17.5, 17 could be the bottom. From there, again, there could be revival in the prices overall, and much depends on the Indian production. And leafy sugar, we are expecting the prices to drop until $480 in short term, and then from there, a recovery. And Indian sugar M30 Muzaffarnagar, we are expecting the prices to come down until 3700 to 3720, and S30 prices to drop towards 3380 to 3360, and then from there again recovering the prices. So that's briefly what I want to talk about the sugar. The last 30 seconds I just want to say that Transgraph, we have competencies in price forecasting and risk management, and we do have a monthly report and we have a daily report. And we also have a risk management software, Transrisk, which will calculate the margins, exposure, realized and mark-to-market P&L. It will aggregate your physical and derivatives exposure. And thank you very much for your time and attention. Myself and my colleague Vijay Kumar Yadav, Vice President Sales, are available here, and we'll be glad to talk to you anything about the markets. Thank you.
Setting up the agenda with your last couple of slides where we have a number of the Indian crop and the price expectations for the short term and a long term basis. And we actually here, yesterday the most important question which everybody asked was, "Kya lagta hai?" We are here to give a direction or a bit of direction on this, to answer this question. Kya lagta hai? Let's do a very simple way, and let's approach this discussion in a very simple way. We know all the components of the Indian balance sheet. Let's go one by one, and let's start with the opening stocks. We theoretically, what everybody talked about, we closed here on a very tight balance sheet. We actually are somewhere between 5.5 to 6.5 million tons of opening stocks as we start 22-23. So is panel agree? Do this panel agree to this, that we actually are in this range, or do you think there's more stock and there's actually lower stocks? What is the view? Harsh, this time?
I think the range is fine. It's the 6.5 million tons is on a higher side. So we are more close to 6 million ton because as Greenleaf, we are very, very pessimistic about the consumption growth. A lot of people are taking very, very high consumption growth numbers in the balance sheet for last year, whereas we are still at around 26.9 million tons of consumption. And for this year, we are taking 27.5. So basis last year's consumption number, we are at around 6.1 million tons of opening stock in our balance sheet. And because we also have, we do the pipeline stock study, which is in-house, but we try to decipher by talking to the local market as well. So that's our premise of taking a lower consumption number. So our stocks are in a range of 6.1, which a lot of people are still on a lower side.
Looking at all the numbers, I think 6 million seems like a fair number. 6 million opening stocks with 35 million, 34.5 to 35 million tons of production, and government has given permission to export 6 million tons. 6 million tons. So I think I will put production somewhere close to 34.5 to 35.
Let's stick to the opening stocks.
Opening stocks to me is 6 million.
I think we are moderate on the consumption last year. Opening stocks were 22-23 around 6.3. Yeah.
I'm of the same opinion. However, my consumption is bit. The opening stock is bit of a higher side. We are expecting about 6.5 million tons of opening stock. But more or less we are called up.
Thank you very much. So my view is looking at the current situation now, considering opening of 6 million and production of around 34 plus minus half million, we could be a tight situation for the end of the 22-23 season.
Opening stocks for the year.
Sorry?
Opening stocks for the year.
I believe it's around 5.5 to 6 million.
What? Production, I'm sure most of us would be on the same page for 21-22. So the variation in the opening stocks for this year is coming from the consumption. So can we jump to the consumption directly and then we come to the production of this year? So we will touch consumption for the last year first. So there's a variation in terms of consumption for the most bullish consumption is Nitin. I'll start from that side. What made your opening stocks 5.5?
I think, my last year consumption was around 27 plus, so that gave me the lowest opening for 22.
What consumption growth are you considering?
My consumption number is 27.5 for the last year.
And the consumption growth for the country?
Consumption growth is 1.5% year on year.
Sachin, you are with 6.5 opening of consumption is on the bearish side. So what consumption growth you are taking and what consumption number you are considering for the year?
So considering the population growth, the per capita income, and bit of health concerns on the sugar, we are expecting a growth of about 1.25% on year-on-year basis. And that is the reason we are expecting the consumption. Last year was about 27. This year we are expecting the consumption of about 27.5.
21-22 our consumption is 26.5 with a growth rate of 1.8% year on year. I think looking at sales quota, there is monthly dispatches and the other factors like we have a distressing rural household consumption which is evident in most of the commodities as well. So we think 1.8% would be the growth which is increase for population and some urban consumption.
We are using 27.5 for current season with annual growth of 1.5%, close to 1.5.
I am very surprised with the numbers. 1.5%, 1.8% growth at what numbers we have been using in the previous years, which brings you to 27.5 million tons for this year, is really very surprising for me.
It was supposed to be mine.
We can interchange roles and betweens. We have that sort of, So, according to me, what we do is, we've been doing this balance sheet since 2002, 2003. According to us, consumption is a very, very linear pattern. If you look at the consumption sources coming in, what numbers ISMA has been using, the consumption pattern has been very, very erratic. So it does not follow the very linear structure of the consumption pattern, which I think is what is the norm of the market. You can have ups and downs, but you can't have fluctuations of 6% and 2% growth and 6% downside and then 8% growth. So we try to linear it out. Our consumption number has increased. In the previous years, we were taking around 2% consumption growth. Now we are taking around 2.5% consumption growth increase. That's why we are coming to around 27.5 million tons of consumption number for this year. Last year we were at 26.9. That's why if we look at our balance sheet from the perspective, you will find a very, very linear curve on the consumption, which has been continuously increasing in the percentage-wise as well, because of the overall how the economy has shaped up and looking all those factors and talking to the market as where the consumption and the dispatches numbers have been. So that's how we work, and this is what our consumption number for last year and this year is.
Nagaraj, you are the technical backbone the way.
Yeah, I think Kapil, for the consumption, we need to see how the HoReCa demand, which is the hotels, restaurants and catering segment, how it is swinged post-COVID. We need to take that in view. So I feel that for 2021, the demand was 25.8 million tons for 2021. And for 21-22, it is 27.3 million tons. So there is a big jump of close to 1.5 million tons in the last year post-COVID, because much of the incremental demand comes from the traveling. So if you are traveling, you will have impulsive buying. So we need to corroborate the demand increase of sugar along with the coffee and cocoa also, the other softs. Okay, because if you are going to airport, you may buy a bag of chips or buy chocolates, and then the travel has significant impact. So I think there is a 1.5 million tons increase in consumption to 27.3 in 21-22, and then for 22-23, I think the consumption will be very healthy, 27.9 million tons.
In a way, we have varied numbers for consumption. I mean, that leads to the next very important question. I mean, if we need a high consumption, we need sugar. So the most important question for the session, production numbers. You know, we started the year with numbers of 36.5 as a general consensus, which was there in the trade. And as it happens every year, there is no consensus 3 months we are into the crush. So can we try to create a consensus, smaller range which market can look up to? Start with you, Harsh.
We started the crop season with 36.25, and with all the reports coming out from Maharashtra with the yields reduction in Karnataka, Maharashtra region, and some red rot issues in central UP as well, we have reduced our numbers very recently to 35.1 million tons. So I think we are still on the higher range as far as the market is concerned, but this is what our current view holds. We will be obviously holding further crop dues in order to ascertain what the numbers are, and we'll make the adjustments accordingly. But as of now, we are using 35.1 million tons of production of cotton.
Is there a downward flag to that number?
Absolutely. I mean, today on the downward flag looks more evident than the upward flag. If you would look at the overall picture or the concerns which are coming out of Maharashtra. But I'm not putting any flag to the numbers as of now. I'll wait for the reports coming out from the ground. The team is already there. So we'll be another week's days time when we'll have a clearer picture coming from there. So then we will decide whether we want to go further with the reduction or not. As of now, we are happy with the numbers, but we're keeping it.
But from the peak, the first estimates were already down 5%. You can say that, right?
Yeah, 36.25 was the first one.
35.
Yeah.
Sonu, what's your take on the production for this year?
I'll put the production number somewhere close to 35. With the downside bias.
Where did you start the year?
We started with 35.5.
Okay.
So we're down to 35, and we have further downside bias of another 500k. So 35.5 to 35 million tons. So that's the range for me.
So at 35, is there still a downward flag today?
No, I don't think so.
So that's your.
Yeah.
Sir, how do you see the crop?
Our initial estimate was 36.4, and we've been touring Maharashtra and Karnataka extensively. There has been a lot of concerns from Solapur, Nagar, and some parts of Marathwada. We see a downside bias both yields in Maharashtra, that's only in parts of Maharashtra, and sucrose in UP. But I haven't changed the number. So if you see like from 36.46, we are just holding on to the 36.46 for now, with the downside bias of 800.
So you are around 35.6, as and when we revise the numbers, we can decide 35.6. 3% drop for you, 1% drop for you from the peak in a way. Sachin, I think your numbers started, you were at the highest, if I can remember, when the first estimates came in, right?
I mean, this time I think Harshveer and me on the same page.
Last year also you cheated.
Last year also. I think maybe we secretly discuss our numbers to each other and then publish and talk the same numbers. That would have happened. But I mean, it's just all off the record to take that. But yeah, I mean, we started with the 36.5 million tons of production as well. And looking at the various models which we develop over the years and talking to the farmers. And sugar mills, we don't think much of the downside in terms of yields in Maharashtra and Karnataka. We are fairly constructive in Karnataka as well. And Maharashtra yield is not, we think the yield is not as bad as everybody thinks. And that is the reason we are expecting the range of about 35.8 to 36 million tons. We have dropped down a bit, but worst case scenario is 35.8 that would be different.
So roughly you have also dropped around 3% if
Yeah.
But do you have a downward flag still 35.8 numbers?
Yes.
Yes, you have.
Yeah.
And mostly coming out of Maharashtra.
coming out from Maharashtra.
We will come back to that production thing. Why? Nitin, if you can. So you are now most bullish in terms of crop.
I think
Where did you start from? You need to say where did you start from this year?
I started with 35 and a half, and currently I am looking at 34 plus minus half million. So, hearing other panelist number, I think there will be second tranche of export. And if I go with my number, then there will be no export. So that's my view for now.
That is the beauty of the trade. No? You have to have a bull and a bear to play in the market so that there is a balance. So you are saying from 35 and a half, now you are at 34 with a downward bias of 33 and a half, if I put the numbers correctly.
Yeah, that's my current view.
We have a low of 33 and a half, we have a high of 35 or like 8.8 as a family. What changed? You know, last year Maharashtra doing 30.8 million tons. People were expecting a bigger Maharashtra crop this year. The crushing capacities have gone up. The crushing capacities 3 years back, which used to be around 6 lakh tons of crush a day. Today Maharashtra touched 800 also on a day and 750 on an average. What happened? Why are we now all of a sudden seeing Maharashtra? We'll start from Nitin and then
yeah, I agree with you. The crushing capacity is expanded to up to the 850, I would say, for the current season against 750 to 800 of last year. But if you look at the current, the crushing done for the season is tentative number is 450%. 55, around 54 to 55 million crush already done for the Maharashtra. And if 50% done, that means we have only 50% left for the harvest. That's mainly rotun. The rotun is giving lower yield than plant. Plant already done. Very less plant left for the harvest. So that's why the reason for the
that's why the lower bias.
I mean, it's very interesting questions always come. So I mean, the crushing capacity has increased over the years. That's no doubt about it. Maharashtra is trading about crushing about 900,000 tons a day now, which is higher than the static capacity. We always utilize more capacity, and compared to last year, the average crush was about 750 days. We have now started in the month of January is 900,000 a day. Having said this, the amount of money all the sugar mills are making, it makes sense for them to increase the capacity. And the number of plants compared to last year is also has increased, which gives you two indications. Once you have a crushing capacity available, you tend to increase the area under cane, which also means that the next year the area under cane in Maharashtra is going to be high.
So you're saying capacities will bring in more crop?
Yes, I am very. I have a positive bias towards whenever there is a increase in the capacity, you tend to have higher number of area coming under for a cane.
What will it replace? Maharashtra has the highest edible land today in the country. There are other cash crops like cotton, which apparently, arguably are now paying better than cane, what media says. So, where will the land come from?
There are various aspects, macroeconomics work, labor availability also has to happen. Now, I mean, being a son of a farmer, I don't want to go and work for the farmer. This is the same goes to each and every, even the labor class, where my children doesn't want to work in the field, and same the labor is not there. Although you are getting higher remuneration right now in this year, you are getting higher remuneration from cotton, the second big the best crop or competition to the sugarcane. And soybean also is paying higher price, but the main issue is the labor, where you will get the labor to harvest the crop. Whereas in sugarcane you have the harvesting is taken care of by the sugar mill, so you don't have to invest. My man in the office is the sugarcane farmer.
I think we need to rush to Prasad, quick take on this.
Yeah, I think what I have seen the trends is like just go back into 16-17 when we had one of the worst crop in Maharashtra. In 17-18 we had a great expansion both in Maharashtra and Karnataka when Maharashtra area for the first time came above 1 million hectares. And at that point of time, I think our estimated operational capacity in Maharashtra was 780,000 tons per day. From there, this year we think that the Maharashtra operational capacity per day has gone up to a million, close to a million. If you see from 17-18 till 21-22 last year, area has gone up from 1.15 to 1.55 million hectares. So in Maharashtra, it is the area which has pushed, and now the mills are increasing their capacity. In Karnataka, it is other way. The Karnataka mills have increased their capacity by big numbers in 18-19 and up to 21-22. Then area jumped from 500,000 hectares to now almost, we believe, that area in North Karnataka would have gone as high as 0.77 million hectares. So it is like both first capacity increase, then area comes in, then there is an area increase, and then capacity increase in this thing. So as long as water is there, cane still remains the most important crop, and this is what we believe is on the optimistic side both for the current year as well as next year, that we have enough water, so that means there will be enough sugar cane.
Just like to add, if there is a water available in the reservoir or the monsoon is there, I would think most of the farmers are going to prefer sugarcane or any other.
What we see in Nagaraj's presentation, about 700 million tons of crush by 2040. I think we agree we are going towards that direction.
I think we can reach earlier over there, the way the crop is progressing. If you
close, technically we are in the right space and the right industry to be.
Kapil, I would say that we have to remember the ag yields per hectare, right? If there is a water, I will say just sufficient water. Sugarcane is the only crop which will give you 60 to 70 tons aram se without much effort, and harvest is taken care by the mills, right? Any other crop, pulses, soybean, cereals, it is labor intensive, labor costs are going up, very weather sensitive crops. So farmers would prefer sugarcane. So water is there, then we are on the positive growth trajectory.
My point always has been very different in terms of the expansion in area. I've always touched upon one point that you have sugarcane as a total cross-cropped area in India is still just 3% of the total cross-cropped area. So yesterday there was question about water guzzling sugarcane. So it's hardly 3% of the cross-crop area which is taking, I don't think it's taking away all the water as well. Another part is, if you look at the state-wise differences of the area, where the cross-cropped area for per state and how much area has been dedicated to sugarcane, there is a huge disparity. So you have Maharashtra which is at 6%, you have UP which is at 9.6%, you have Uttarakhand which is the highest with UP at 9%. So there is still a lot of potential for these states itself in order to increase the cross-cropped area, sugarcane area versus the cross-cropped area to a respectable number. Whereas in Brazil, if we look at it, it's around 15-16% of the total cross-cropped areas of sugarcane. So the potential obviously is there in terms of increasing the area. Then you have old states which can easily come up to the production level and increase the area back in the southern states of Andhra and Tamil Nadu. We've already seen the trajectory changing in the last 2 years. So there will be new avenues which will be opening up, especially with this ethanol, which is giving a lot of impetus for growth. So I think in terms of area, what Nagaraj has given of 700 million, I think we can reach very easily towards that level. If you look at the 5-year CAGR of the area itself, it's around 2.5% growth in the area alone. So that can give you, a lot of gain per year, even if it has to increase by 0.1% or 0.2% person or hectare, a transitional growth can easily give you a lot of space.
I'm not touching exports. I mean, this discussion can continue for very long. There is another panel for exports. We'll leave this session for the discussion on exports to you people. And so let's yes, please.
I think for this year, 22-23, there is the 5.9 million hectares is the total acreage, which is 6% increase. And for 21-22, the production we are taking is 35.9 million tons. So we initially started with 36.6 million tons. But after talking to the players here, people are talking about 34. So I think the production will be in the range of 34 to 36, but more towards 36, basically, because there is a 6% increase in agriculture.
So bias is more because there's more area, we might have a higher level of production. Fair enough, sir.
My one question on production is my disconnect on one part on Maharashtra. That last year to this year we are talking about an incremental area which has been given by the respected cane commissioner as well. So with that incremental area, how much is the potential yield downside which people are estimating that the crop can go up to 34 million tons? Well, rains have been there, erratic they have been there, agree, but rains have been there. And we know what cane is capable of.
We'll leave this question because we need to start the minister's speech. But one thing will, maybe this panel will come back again when we touch 700 million crush. We will discuss again where do we go from 700. Thank you guys. Thank you. I'm sorry we can't take all your questions. Thank you.
And now it's time for memento felicitation for this session. Huge round of applause, ladies and gentlemen. A very warm welcome, sir, on the behalf of Chini Mandi. We will start with our speakers first. The Managing Director, Transgraph Consulting, Mr. Nagaraj Meda. We are so obliged to felicitate the founder, Greenleaf Corporations, Mr. Harshveer Soni. We are grateful for the talk. We will now felicitate Sugar Analyst COFCFO, Mr. Sonu Kumar. Giving our regards to Senior Analyst Tropical Research Services, Mr. Prasad, MSR. We are thankful to Sugar Trader Viterra India Private Limited, Mr. Sachin Lakade. The next bright felicitation is for Sugar Analyst Indian Subcontinent Sucden, Mr. Nitin Tarate. And now it's for our moderator, Assistant Executive Director, Dalmia Bharat Sugar, Mr. Kapil Nema. The session was quite intriguing, very engaging of yours. For a second it felt like an economics classroom. Thank you so much, and that was a great session. It was a beautiful start. Let's have a photo opportunity. I would request all the panel speakers and